Appreciate you all taking the time to listen. And in choosing the presentation today, I know some of you may have heard Justin Andreozzi's presentation on offers and compromise. Um, sometimes I feel like the Rolling Stones, where there's a lot of new stuff going on at IRS with regard to their new campaigns and initiatives and cryptocurrency and offshore compliance and all the heavy technical new things that are happening with the Inflation Reduction Act, things like that. And people want to hear about that. But at the same time, it's amazing how much people want or maybe need to hear some of the old stuff. And one of the things that always just seems to come up, and it's been coming up a lot. We do just a 2-second thing on our firm. We're a bunch of most of us here, or some of the older guys here, are all former IRS, either IRS chief counsel, Department of Justice tax, or IRS revenue agents, revenue officers. And we're just saturated tax controversy. So we do a lot of work with accounting firms like you guys around the country, enrolled agents, and we hear things that are happening a lot. So we sort of have our ear to the ground, whether we like it or not, on what's happening with IRS. So we've got those new initiatives, but by the same token, we're getting calls a lot these days on some of the old stuff where, the rule of thumb is if you don't remember history, you're doomed to repeat it. That's happening. So in discussing this with Cherie and others on what topics to talk about, I just thought it was a good time to resurrect or to talk again about sort of and I'm going to present it in sort of a story or fable method here on whatever can go wrong will go wrong. Okay. And, again, it's so many times if you're at like a cocktail party or with friends or things like that, as an accountant, enrolled agent, or tax attorney, people will come up to you maybe and say, hey, I get paid in cash, so I don't have to report that, right? Or things like that. And of course, you're going to say, well, of course you have to report it. Our income it's income from whatever source derived, and you have to do it. And the people roll their eyes and smirk and say, yeah, okay, I know you have to say that. Bottom line is, it may well be that somebody could not report things or get away with things year after year after year. The problem is that one time where it catches up with them. And taxes can easily turn into crimes, even for people who think that there's nothing wrong with what they're doing. And that's what this story is about. It's about taxes and crimes, and the moral that you guys all have to face of prepare for the worst and hope for the best. Dealing with clients who present you with what we call eggshell type situations. And you're walking that tightrope, having to figure out how best to make them happy, but make sure that you and they are protected. Okay. So I'm going to talk about one specific thing just to sort of serve the purpose here as an example. And that is the good old trust fund reporting penalty. And as I say here, the practitioners, the clients, the IRS representatives that I might use in examples are fictional until they're not. And the events portrayed here are fictional, and they don't represent actual events until they do. So with that said, let's talk about a little bit about payroll taxes. Just to give you a sort of a 30,000 foot overview and why this is such a tricky area. Okay. As you know, when a taxpayer files their 941s quarterly, a part of the amounts that are reported on there are the employer's contributions in. But the larger part of that 941 liability that's paid is comprised of two different sections. One is the income taxes that the employer withholds from the employee's pay to pay over to the IRS, and the employee portion of FUTA and FICA. Together, that's the trust fund, what the IRS colloquially calls the trust fund portion, okay? And you have to file that quarterly. You have to submit the forms, blah, 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 do all that and pay the money in. If you're on electronic reporting quarterly or paper recording, some people might still be on there, and you don't have a payroll service, a lot of times you might say, well, I'll file it late, or I'll file it and catch up with the payment late. And you're trying to keep the lights on, you being the client, the business, pay your employees, keep the business moving, things like that. And the IRS is one creditor that doesn't always show up and demand payment like the landlord right away. So many times people start to get behind on their 941s and their trust fund penalties. The problem is that the IRS perceives that as a bad act. They perceive it as willfully failing to collect or pay over the amounts that you're supposed to collect, the Social Security's taxes, the excise taxes, the withholdings, things like that. In other words, the logic is going to be that in this area, if you knew or should have known that you should have collected these and you willfully or intentionally didn't, or collected them but didn't pay them over, you're all of a sudden in a situation where you're violating the law. And say, okay, well, that's fine, but what does this have to do with crimes? You know, I'm not going to go to jail for this, right? Well, wrong. Because what I did here, and you'll see on the screen here, is a comparison. The top code section, IRC section 6672, is the civil penalty for failing to pay over trust fund taxes, okay? And that penalty goes to someone who's called a responsible person. And the IRS has a definition of responsible person, and it includes effectively the owner of the business, partners in a partnership, shareholders in a small corporation, and even extends to employees who have a responsibility to make sure or are delegated the responsibility of filing and paying the 941s, okay? So that definition of a responsible person is very broad, and it is included in this section that says any person required to collect and pay over any tax who willfully fails to collect such tax shall, and I'm going to pause there for a second, because that's the civil side of it, okay? If you look at the criminal side, there's a criminal statute, right? Well, let me do this. Let me finish that whole thing. So that's the first part of the civil statute. The second one is that person shall be liable to pay a penalty equal to the amount of the tax evaded or not collected. So in other words, under 6672, if you're a person who is identified as one required to collect on behalf of that company any tax and you willfully fail to pay it over, you're going to be liable for what they call colloquially the 100% penalty. 100% of that amount that's due is what you're liable for. So if you're a comptroller or a clerk or an owner or whoever that's there, you may well be liable for that penalty. But it's money, it's cash money, that's all it is. They're not going to do anything to you on it. But now let's look at the section below. That's Internal Revenue Code section 7202. That is a crime. That's a criminal section. But look at the words. any person required to collect who willfully fails to collect and pay over such tax shall, same words, except now it's this. Instead of having to pay over the money, this penalty is they'll be guilty of a felony and upon conviction thereof be fined not more than $10,000 or imprisoned not more than 5 years or both. So the problem that you have here is when you look at this, and this is a unique situation. Most tax crimes are different, and we're going to talk about those later on, and they have other elements that are way more draconian or higher to meet than civil penalties like negligence and even civil fraud. But in this circumstance, because you're dealing with the concept of taking your employee's money, holding on to it, putting it in your pocket, or using it for other expenses, and not giving it to the government sees that as almost a conversion or a theft, and they want their punishment to be exacted. Now, when does the government pursue criminal charges and when does it pursue civil? My expert answer is, I don't know. We've seen situations, for the most part, the lion's share of cases are under 6672. Okay, that's where they are. But every once in a while, if the IRS either is focused on somebody or sees something weird, they might just say, we're going to go after, or if they just had enough of repeated delinquent payments or things like that, the collections officer might refer the case criminally. Okay. But the important thing to note here is that you've got a civil statute and a criminal statute that both say the same thing. And it's such a dangerous thing because it's hard to explain to your clients. You'll just get the eye roll, but it's there. And you really have to know that it's there. And now here's the other thing. And this literally just happened to me the other day. An accountant that I've worked with for years and years and years had a family member call me and they said, hey, I got this notice from the IRS. They have a relationship with a business. They get paid out of 1099, but they do work in the office and they help it's a construction business and they help the guy who owns the business work through the books. This guy gets a notice and doesn't realize what it is. And I'm reading it and I said, the IRS is investigating you as a responsible officer for a trust fund penalty. He had no idea. He says, I've been trying to call them for weeks and weeks and weeks and leaving messages and things like that. And they never get back to me. And my point to him was, good, because you should not be talking to them. And the reason he really shouldn't be talking to them and going through counsel is the following. The IRS will, when they're searching for responsible officers of a corporation, in the event that a corporation or partnership or business entity can't pay the trust fund liability, they're going to talk to anybody and everybody that might be a responsible officer. Okay. They'll start with the owners and then go to maybe the board of directors or officers or controller or clerk, and they'll work their way down, because what will happen is they will get people to start pointing the finger at one or the other. It's his job, it's her job, it's that person's job, because nobody wants to be labeled a responsible officer. Or if the IRS revenue officer is savvy enough, they won't know why or in what context they're asking the questions. Okay. So there's a thing in the IRS called a Form 4180. And revenue officers use that form to determine who is a responsible officer. Okay. And what they will do is, rather than just give the form to the lawyers or the representatives or the enrolled agents that's representing the taxpayer, what they will do is they will hold what's called a 4180 interview on the record, and sit with the person, take notes, and fill in the form while the person is sitting there telling them the information. Then what they'll do is, at the bottom of this form, and it's all questions relating to what the person's role was, why the amount wasn't paid, whether, and this is crucial, the business had available funds to pay other expenses or creditors rather than the taxes, which is, quite frankly, virtually always the case. Think of any business that you guys represent or you do their returns for. They will have a cash flow. And if they have a cash flow and they choose to pay the electric bill or other payroll before they pay the IRS the 941 taxes, they have willfully failed to pay over amounts that they've collected from their employees. Pure and simple. Got them. So the agent or the revenue officer will ask the question in a very matter-of-fact, benign way, write down the answers, and put together a Form 4180 that provides every nail in the coffin of making somebody a responsible person. And then they'll push the 4180 across the table and have them sign it under penalties of perjury, admitting that they're a responsible person. That's how easy it is for the IRS to identify, label, and get somebody to effectively admit that they just violated either 6672 or 72, which is a civil penalty, or 7202, which is a crime. And the IRS can pick and choose which one it wants to use. So when you explain at the cocktail party that part of it and how easy it is, then the only eye rolling will be whether, well, it probably won't happen to me and I'm just playing the audit lottery. But they'll certainly quiet down when they hear that point. So that's the key thing. And from your standpoint, when you're, and so that's sort of the intro to this whole dialogue on what you do, okay, in this sort of morality play or story. What's the point of this? Okay. One point is the importance of knowing your client. Okay. The more you know your client, the more you, as an enrolled agent, a CPA, a practitioner, are going to be protected from pitfalls that come up with respect to whether it's a tax return that you're preparing, representing the client in a collection matter on an offer in compromise, or payroll tax issue, anything like that. Okay, you will be ready. And in that sense, I can't stress enough that the organizer is your friend. Okay. And I know it's a difficult thing because nobody fills out the organizer and they just throw the documents in the box and send it off and everything else. But the more you're able to encourage and cajole your clients into filling out the organizer, the more you're protecting yourself. Because as you know, the organizer, whatever tax software you use, things like that, is there to identify issues old and new that the IRS is coming after. So for example, the big thing had been foreign bank account reporting. That's now in all of the tax organizers. Cryptocurrency, now in the tax organizers. Different things where, captive insurance, conservation easements under 170, all identified now in your organizers, so that if the taxpayer doesn't identify those things, you have something in your files that says they didn't tell me about it, and you avoid, we're going to see, the old thing of, well, I told my accountant that I had this and they told me I didn't have to worry about it. So in that sense, the organizer's your friend, and the more you pay attention to and adhere to the AICP standards for for tax practice, standards 1 to 7, and circular 230, those, as painful as they are and as annoying as they are, et cetera, are really your shield against a client who's not forthcoming with all of their information, because at least you're moving forward, doing things correctly, and then protecting yourself. And if you use the language of the AICPA standards and use the organizer, you don't have to generally get into the headbutting contest of the client saying, well, who are you, the IRS? You're already auditing me and you're just doing my return. You're just having them give you the information, or at least tell you what they have to report, and deductions, things like that. Okay. So the thing is, and you've all seen this, these are the kind of things that really get, you hear it and you hear it. I hear it when people come to me, even when they have already have tax issues. And my ears are perked, and the other lawyers in the office and the accountants in the office all, we kind of joke about it, but the joking is a little bit of whistling past the graveyard. Those phrases that you hear from clients, like, can I be honest with you? Okay. Do you want to know the truth? No, lie to me. Can I tell you what really happened? No, tell me something else. Okay. You mean all of my bank accounts? Do I have to report all of the money? Not Venmo or PayPal, right? Just the bank accounts, right? You've probably heard it all the time. Okay. And the thing is, these should be signs that there are going to be problems, or there could be problems later on with the returns with your client. Okay. Other things. Okay. What can I do now? Now, this is more of a collection side of it. Those questions might have been income tax return prep questions, but you can also get these if you have a client walking in and all of a sudden they owe money to the IRS, and you're talking in terms of doing a 433 or an offer in compromise or an installment agreement. And all of a sudden you'll get these kind of questions. What can I do now for asset protection? Well, it's a little late. Should I take money out of my bank accounts and put them elsewhere? We've actually had lawyers come in with their clients with tax issues suggesting this as well. And I think it's one of those things where it seems benign, but you can't do that because that is a fraudulent conveyance in the eyes of the IRS. Should I transfer assets? Should I get divorced? Should I make less this year? Or these things, the business belongs to my wife, my dog, my kid. We've heard it all, right? Or the company, oh, that LLC is gone, and now I have this new LLC or corporation. Or when they're writing down for the 433 identifying assets, they'll say, well, you don't mean cash that I might have in the drawer somewhere, right? Or do I have to list properties that aren't in my name? Those are all signs that you may have a situation where if you submit a statement of financial condition, a form 433, or an offer in compromise, or God forbid you file a bankruptcy petition with a court, okay? All of these things could be make you vulnerable to two big things. And we're going to talk more about tax crimes later on with the other crimes. We already talked about 7202 on the trust fund penalty. But these types of things, transferring assets, false forms 433, alter egos, nominees, people transferring to friends, relatives, etc. IRC, Internal Revenue Code Section 7201, applies to both pre-assessment as well as collection liabilities. 7201 is tax evasion. Typically, what you'll see is you'll have a tax evasion count associated with fraud on a return. A pizza place skimming and not reporting the income. A person selling drugs or something, not reporting the income. Those types of fraud that result in the evasion of tax, probably a good 90% of them are attributable to income tax returns. But you can also have evasion, Section 7201, apply on the collection side. If you file a false 433, okay, or an offer in compromise on Form 656, all of those things are filing documents under penalties of perjury with the IRS. And if they're false, those are even easier to identify as evasion, because if you're falsely and willfully, knowingly, and falsely underreporting your assets for collection, you're trying to evade payment of the tax. And the IRS can tie that together very nicely. And it's like gift wrapping it if you give this to them on Forms 433 signed by the taxpayer. Okay. So the thing is, you want to make sure that the client is aware of that, understands it, and knows that this could be a thing. And the more you're able to do that and lock it in, you avoid the possibility of being in some way included in the conduct, whether it's through what's called a client conspiracy or something like that. Okay. So we talked about an example. Then we talked about the client and things to kind of be watchful of and how to protect yourself against them using the organizer and relying on your standards of practice in Circular 230. Now let's change focus in chapter 3 of this story and talk about knowing the players on the other side of the equation, the IRS. Let's talk about who you generally will be dealing with first. Okay, the people you know pretty well. The revenue agent. Okay, the revenue agent is the guy or the lady who is going to bring you in and examine your tax return to see whether it's correct, and if not, to assert adjustments to the return so that they can create a proposed deficiency in tax to say, hey, do you agree with this pre-assessment? Okay, and if you agree with it, or if they win, then that tax is assessed. Okay, so you're dealing with the revenue agent at the examination phase of any IRS controversy. Okay, an audit, an office audit, an issue-based audit, which are really big today. Those are revenue agents or issue management teams. The revenue officer, on the other hand, is the person who is assigned to the collection side of things. Okay, you would deal with them. They'll come knocking at your door or calling you or sending a letter saying, hey, I'm here to collect the $1 million that you owe. And when you're dealing with them, you're dealing with the people who you submit a 433 to, or a 656 offer in compromise, or an installment agreement. Okay, and you're dealing with them. They're the collection people, the collection arm of IRS. The group of people that you don't want to be dealing with are next. Okay, the special agents. You don't want to be dealing with special agents. And you know who they are because they always come in pairs to your house at 7 o'clock in the morning, like Sith Lords in Star Wars. They travel in pairs, and their job is to investigate crimes. The IRS will open. So if the IRS opens an examination of the taxpayer, you get your friendly revenue agent. If the IRS opens a collection matter against your client, you get the friendly revenue officer. If the IRS opens a criminal investigation against your client, you get the police, you get the special agents coming in because they are investigating crimes. And your relationship with the special agent is dramatically different from your relationship with the revenue agent or the revenue officer. With those people, there's more of an ability to talk to them, work with them, try to resolve the matter with them. If they issue IDRs, document requests, you cooperate, you do things, you give them stuff. You may even, in rare circumstances, which I would say have to be very rare, allow them to talk with you and the client. Okay. Not a very good idea, but at least you can, if there's a way of reaching resolution, you may want to consider that with the revenue agent or revenue officer. Okay. With the special agent, you have to be careful because the client does not have to talk to them, and they are going to use anything the client says against them in trying to put them in jail. So you still have to give them the documents that they request, as long as they're not privileged. We're going to talk about that later, and relevant to what's being asked for. And we're going to talk about that later. But those are the people that you have to know who they are. Okay. Another person is the counsel attorney. I was with chief counsel's office when I was with IRS for 16 years, and I would often work with the revenue agents or revenue officers or special agents in developing cases. So a lot of times I'd show up at the taxpayer's business or different things in large case audits. And you probably were uncomfortable if I was there, because that means that the agents are looking at something significant enough, complex enough, large enough to bring IRS chief counsel lawyers in to help them manage the case. Okay. And last thing is, I talked about an issue management team. Those are specialists these are teams that are formed to facilitate the various campaigns that the IRS is managing at any point in time. So for example, these days, there's an FBAR issue management team. There's a conservation easement issue management team. There's a captive insurance issue management team. Okay. And all of the listed transactions or significant areas, cryptocurrency, things like that, have issue management teams that are comprised of agents, specialists like actuaries, economists, things like that, counsel lawyers, and people like that, to make sure that they're coordinating all of these specific issues nationally. So it's probably another group that you don't want to see much, but you kind of know they're there if you get a IDR, an information document request, that's asking for something very sophisticated and lengthy, and you say, where did this come from? It's likely from an issue management team. So the thing is, knowing these people is vital, because you got to know who you're dealing with. And now let's turn to chapter 4, because I'm going to tell you that knowing the people isn't always what it appears. Okay. So chapter 4 is the process. Trust the process, or maybe not. And the reason I say or maybe not is, you may have a client where you think you're under examination. Okay. Or you may have a client where you're thinking, oh, this is a collection matter and we're walking through things. Okay. There's such a thing called a parallel investigation, where the examining agent can go in and work with a criminal investigation team to work an issue. It's very rare, and they have to be very careful, because there's rules on separating criminal and civil investigations, because there's a tendency, a good strong tendency, that it will cut off the constitutional rights of a taxpayer if they don't know they're under criminal investigation and they think it's civil. Okay. So if the agents tell you who they are, be on the lookout for that, especially if you have a case where you perceive it as what we would call an eggshell audit. Things where it's like, uh-oh, this could go sideways quick. Unreported income, things like that, concealing assets, that sort of thing. If there's stuff like that there that's happening and you're having to deal with it, be mindful of the fact that the IRS can employ a parallel investigation, okay, and know the consequences of that, which is instead of a stat notice, you might get an indictment. Okay, very, very important. And the question is, well, how do you flush them out? Very, very delicately is the best I can tell you, because you don't want to be in a position where you're sitting there with a revenue agent working a case, hoping to resolve the case, and you ask them, hey, by the way, am I under criminal investigation? Their answer to you is going to be, why should you be? Of course. So it's not the question that you would ask, but if something does smell wrong as you're dealing with the agents or something like that, reach out to counsel. You could call it, well, we do this all the time, but you may have local counsel who tax attorneys, get them involved. And there's ways to address the question, okay, by not coming right out and saying, is there a criminal investigation? Okay, so just be mindful of that. And if there is something like that, make sure that you understand that you can easily get counsel involved in an examination at any stage. Okay, and so in that sense, you should always be looking at and thinking about considerations on answering questions in an audit. Okay, so for example, the typical route is a form 4564 IDR. You guys have all seen them. Okay, here's the thing. When you're sitting there looking and working with the taxpayer on a response to an information document request and determining what to provide and what not to provide, err on the side of less is more. Okay, answer the questions, no doubt, because you have to, unless there's something that's privileged in there. Okay, but if they're looking for GL journals or things like that, QuickBooks records, they're entitled to those things for the most part. Okay, but what'll happen is oftentimes the inclination is for the taxpayer, for the client to say, oh, you should give them this because this will show them that I'm really honest and above board and everything else. Give them this, give them this, give them this, give them these other things too to show. And the thing is, if you give them more, chances are that more isn't going to make them like you better. Okay, they're going to say, you're giving me more work to do. I have to go look at these documents. I didn't ask for these. Or that's the best thing that can happen. The worst thing that could happen is for them to actually look at the documents and possibly say, you know what, I think I better audit this area too. What about this? What about this? What about this? So keep your answers tight, keep your document responses tight, and be very careful on what you provide. Answer the question only. You can always supplement when you go to IRS appeals or somewhere else if there's information you need to give them, or if they don't ask for certain relevant information, maybe address it later. Okay, but in response to IDRs, just answer the question. Likewise, and I said before, request to interview the taxpayer, generally a non-starter for me. They potentially can issue a summons for that, but the summonses only cover testimony on records that are provided as sort of a record keeper and nothing more. So if the examining agent wants to interview your client, one of the things you might want to say is, why don't you just issue us questions and we'll answer them? If they push back, they should say yes. If they push back and say no, your response should be, well, if you want an informed answer to the question, my client's not educated, he's good at what he does, but he doesn't know tax or anything. He's not going to give you a good answer, and we're going to have to go back to the drawing board anyway. Why surprise him? Why not write them down, let us answer them, and we'll give you the answers. If they push back on that, the inclination is going to be they're trying to catch the client in a lie. And if that's the case, then guess what? Now you are on alert that you may have Fifth Amendment considerations because the client doesn't have to testify against himself. Okay. So if something like that comes up, another reason to get counsel involved sooner rather than later. There's other things that the agents will do. They'll ask to visit the place of business. Generally, I frown on that. But if they need to do it just to see how the business works without talking to people, they can do that. You may want to let them do that, but you should not be in a position where you're letting them wander around the offices or the factory or whatever, talking to people, employees, staff, things like that. Letters to third-party contacts, bear in mind that the taxpayer is entitled to see all of those things, okay? And of course, summonses to the taxpayer and to third parties have to be addressed. So the next chapter, and I know I'm a little bit short on time here, is knowing the rules to the game, okay? The more proficient you are on potential tax crimes and ethical standards, the more comfortable you're going to be in sitting there and doing the returns or dealing with IRS. So just a real quick overview of the criminal statutes that I didn't talk about. The criminal statutes are under Title 26 and Title 18, okay? We talked about tax evasion to Section 7201. One of the things we didn't talk about that's very important and that is used all the time is 72061 is making a false statement on a tax return, okay? That is a crime. A willful making of a false statement on a tax return is a crime. You don't need the intent to evade tax or to show a tax is owed. You could lie for a different reason. That's a crime. 72062 punishes people who, like return preparers, etc., who aid and abet in that process, okay? So that's where you guys and I would be vulnerable if we did something like that, where we're assisting the client in making false statements to the IRS. Section 7203 is the willful criminal failure to file returns to hide income. Section 7207 deals with submitting false documents. And one code section that they love to use is the crime for obstruction, Section 7212. That's a very easy thing for the IRS to prove based on destruction of records, things like that. The courts have restricted the IRS's ability to use that in recent years, only because the IRS was just trying to throw that out and eliminate having to prove tax owed is really the goal, and to make it a slam dunk case. And the courts have pushed back on that. Then some of the Title 18 stuff, two big things. The Klein conspiracy I talked about before, that's 18 USC section 371. And the very simple one of section 1001, false statement. If you're sitting in front of a revenue agent, revenue officer, special agent, and you lie to them, your client lies to them, that's the easiest thing they could get is slap in a false statement, okay, on a written document or word or spoken. So those are key things. And with respect to you, those are crimes against the client. And from a return preparer standpoint, there are also crimes for, like I said, 72062 and conspiracy, but also mail fraud, mailing or wiring, e-filing false tax returns to the IRS. They're getting more and more bold on using mail fraud and wire fraud there. And of course, obstruction of justice. Okay. So the thing is, in closing, just be wary of things that you don't see coming. Okay. Hope for the best, expect the worst, prepare for the worst. Okay. Because they could come from any source. And the bottom line is it likely to happen? No. But when it does happen, it's the worst thing in the world for the client and for you. Okay. So all it needs, it's that black swan. You just don't want to have it happen. And so you should understand the rules. Last thing I'll say is, is just understanding privileges. Okay. I have certain privileges, the attorney-client privilege with the client. I can talk to the client, and whatever the client says to me is protected. You guys have the federal practitioner privilege, which is worth maybe a Starbucks coffee, and that's it. Not much is protected under 7525. Okay. But in the event that, let's say, you're involved with either me in defending the client or your local counsel there, one of the things you'd want to do is get a Covell agreement where when you have this in certain instances, if you're helping prepare for trial, a tax court case or something like that, you can use a Covell agreement with the lawyer so that the accountant and the lawyer are both under the lawyer's privilege, umbrella privilege. And so that really helps facilitate good dialogue, and the people don't have to worry about the accountant being called to testify. I use Covell agreements throughout my practice, and they've been effective. Okay, so the thing is, the moral to this story, the epilogue, if you will, is we can't control our clients and we can't control the IRS. But what we can do is create an environment that reduces the adverse impact of those variables. The untrustworthy client, the aggressive IRS, et cetera. The more we pay attention to these rules, understand things, use the organizer, that sort of thing, the less likely it's going to be that you'll ever see the criminal agents come to the door. I know I went over, my apologies. If there are any questions or anything, if we have time, I'm happy to take them. But thank you again for your attention here.
Thank you, Randy. We do have a couple of questions. First, we have Tom. It says, if you submit the payroll hours and click the process button for ADP for a client, if then the client bounces the liability and thereafter doesn't pay, is the tax pro also now responsible since it hit the ADP submission button? The ADP service is on client, but the CPA only takes hours and punches and submits the button. ADP does everything else and filing returns and paying liabilities from client bank account.
Yeah, I think the thing is, you wouldn't. It's unlikely that the tax professional, the person like the ADP or whoever's doing that, if they don't have an understanding of the client's cash flow, they wouldn't have reason to know that the client's going to bounce that check. Okay. So for example, we use ADP or whoever we use, the other tax service. They don't know what is, necessarily know what's in our bank account. They're assuming that it's going to get paid. Okay. They'll send us the 941s or send them in or whatever. And unless they have reason to know that it's going to bounce and they're able to make decisions on that or control that in some way, very important, control the ability to pay other expenses with that money, they're not a responsible person. They're more of an independent contractor to the company rather than somebody on the inside making a strategic, informed, willful decision. I'm not going to pay this liability. I'm going to go pay my electric bill.
All right, so we have two questions from Alexander. It says, if the response is why should you be under criminal investigation, is it wrong for the taxpayer to say no, but don't I have the right to know if I'm under criminal investigation?
I think I understand that one. If Yeah, if you ask that question, again, it's a dicey question to ask, but sometimes if it comes up, it might just come up and say, wait a minute, is something else, another way to pose it is this the only investigation? Is this audit the only investigation that's going on? Because it could be some other thing happening. And you don't have to use the word criminal. But here's the key thing. I think this answers your question. If you ask the question, they cannot lie to you. Okay. If it's a parallel investigation, they have to tell you yes. Okay. If they give you an answer, or they could say, I'm not answering that question. They can, believe it or not, they can do that. Now, if they say that to you, then that's when you want to get counsel involved, because I would take the path of saying, okay, then what you're telling me is that you're asking me questions here. You want information from me, an interview, documents, and I can't be sure that it's for the examination that's documented and identified in the audit letter. You might be trying to get it for something else. And if you're trying to get it for something else, I need to know that. And if I can't get a straight answer, then I'm just not producing the documents. And it's a good answer to have. Problem is, you don't necessarily want to be the person pushing that button, because the client might say, what are you doing? Just give them the stuff. Don't get me in trouble. They need to hear it from a lawyer so that they know, because a lot of times we'll get that pushback. What if we just cooperate? Won't they think we're being nice and leave us alone? That question is the same as the cop on the street. If I give him all the information, will he be nice and leave me? No, he's going to arrest you. No, they're going to use it against you. So I would approach it that way. If they say I'm not answering, you should have a pretty good idea.
Randy, thank you. That was the last question of the day. It was such a pleasure to have you join us today and share such insight on the topic. Everyone, his slide is up. If you need to get his information to contact him directly, I'd be happy to share that information with you. But Randy, thank you so much for joining us today. NSA members and attendees, it was such a pleasure to have you. And we thank you so much. Again, check the NSA Learning Center. Certificates will be available within 14 business days.
Thank you, everybody. Much appreciated.
Thank you so much.